So just real fast here, some updates. It looks like my Ethereum bullishness has already paid off. The increased confidence in Ethereum looks like over the last day or two of 24-hour trading, Ether has actually done better than Bitcoin has in terms of its US dollar value. So let's see here. One Ether up 4.1% over the last 24 hours, whereas one Bitcoin about flat, up only 0.08%. And to be sure, Bitcoin is still doing very well. $109,000 and change a coin. And the chart, you see just classic ascending pattern where the pullbacks are then met by increased buying. Absolutely classic looking chart. But what's interesting to me is over the 5 year span, how similar Bitcoin's performance is to Ether, the number two crypto. So over the 5 year, one Bitcoin up 1,059% or so. And over the same time period, one Ether up 1,048%. So almost the same increase in value if you zoom out to 5 years between the number one and number two largest cryptocurrencies, which makes me feel like the whole thing, in a sense, is a kind of movement, right? This is a movement that's occurring. And this is, in many respects, fresh money. It's money coming out of nowhere because people believed in Bitcoin. And then markets eventually met that belief with the higher market capitalization. And suddenly, these believers who had nothing other than a string of computer code, other than some private keys, these crazy believers now have a lot of purchasing power. And it's either the fifth or sixth largest asset on the planet at the moment by market capitalization, Bitcoin. So, really incredible journey. And I'm always trying to find the next thing. And I am practicing sell in May and go away. I've sold all of my US stocks, but that doesn't apply to my commodities and crypto, obviously, because I think the pullback in volume that we've seen so many past summers in stocks doesn't always apply to crypto, and it certainly doesn't always apply to rare commodities. And gold for many years did very little. Gold was an absolute underachiever compared to tech stocks, the big seven, right? Facebook, Netflix, Microsoft, Apple, Tesla. These companies ripped ahead of gold owners for many years, whereas gold produced no dividend. And if you're not making money from gold, you're losing money, right? Not only the maintenance fees or whatever, but if it's not increasing in value and if it's not staying stable in value, then it's probably losing value, right? So for many years, the gold bug was a structural loser. And now I feel like gold is gleaming, absolutely gleaming. So I've been you know, those of you who follow the newsletter and listen to this podcast, I've been a vocal gold supporter, if you can call me that, since around 2000 an ounce. And now we're at $3,300, 3,300 something dollars an ounce. So a gain of more than $1,300. Since I really put my foot down and said something's happening here, just like crypto's a movement, just like that 1,000% gain in 5 years is indicative of a lot of people walking into the store for the first time and buying our precious crypto. It's indicative of a mass movement. Well, I see the same thing happening with gold. You see the demand every weekday in Asia, and you see these video clips that have been posted to social media of gold stores outside of Beijing and other Chinese cities. These gold stores where you walk in, and as the name implies, it's just a store that sells gold, which you don't really see in America because the central bank is all powerful here, right? The Federal Reserve has a literal monopoly on money until Bitcoin came along, anyways. Monopoly on money issuance and usage. So they don't really want people buying gold with your made up Federal Reserve dollar. And there are coin shops and stuff, don't get me wrong. There are coin shops across America. where you can buy or sell gold and silver. But it's simply a different experience from these extravagant bazaars that are being shown on social media, where you walk in and all you see from from floor to ceiling is the glimmer of gold, and Chinese consumers just picking up kilo bars and stuff and putting it in a plastic bag. So they have a thirst for gold that we really don't have in the West. In fact, again, our banking system and our academia has done its best to try to cover the gleam of gold with, well, that's not socially conscious. Investing in something with no dividends and that hires nobody other than some low-paid security guards, maybe a couple of lawyers to draw up the contract when you first put it in a warehouse. Not a big driver of economic growth. There's something Warren Buffett said there's something un-American about gold investing many years ago. I wonder if he's changed his tune now that he says that other currencies might have a place in the world. Well, gold is the ultimate. Gold is the ultimate rare thing that humans covet. And there's a certain percentage of women that when you show them some gold, they turn into Sharon Stone's character from Casino. It's like their brain just goes, into some kind of catnip mode. Humans are drawn to gold. You don't need all these influencers who are, maintaining the Bitcoin Overton window to where $110,000 Bitcoin is nothing to these people. They could trade a private key, some little bullshit on a computer screen, for nearly $110,000. And yet you've got these very passionate influencers constantly maintaining this narrative window, right? That's nothing. Why would you sell at 110? That's nothing. Well, this network of influencers is not needed for gold. There's no Jack Mallers or Michael Saylor constantly singing the praises of gold. In fact, we have kind of the opposite. We have this socially retarded guy, Peter Schiff, who spent his life attacking Bitcoin, which for many years was a smaller asset than gold, much smaller. It still is. But there's not much logic to attacking a competitor that's smaller than you are with the hopes of chipping away some of their business. Like when Starbucks advertises, they don't say we're better than Pete's Coffee or we're better than, Dunkin' Donuts. They just say we're Starbucks. They aren't trying to pick off smaller competitors. And yet the most vocal name in gold is a complete social moron, a complete retard who's spent years aggravating some of the very people who would be gold collectors if not for him and his weird worldview. Because these two things are actually very complementary. And I remember years ago, I was at this meditation, this retreat in California. Very kind of fancy thing. It's funny that spiritual things are referred to you by your wealthy friends. Something weird about that, right? Because you'd think that a spiritual guru, he would just find you. He would know that you're suffering and he would seek you out, right? But in the real world, just like anything, I guess, a metaphysical guru is just another specialist, no different from a cardiologist or psychiatrist or hat maker, or, just another specialist in our over-specialized age. And so the referral comes to you actually through your more successful friends, believe it or not. It comes through the people who have so much time and money that they can spend time on this bullshit to begin with. And so anyway, it was a really good meditation. And we were in the circle. We were in this circle, and we all put something that was important to us in the center of the circle, something symbolically important to us. And at the time, I used to travel with a gold coin just for good luck. I always traveled around with the 1 ounce something or other, usually a Krugerrand. So I pulled this coin out and I put it in the center. That was my contribution. And then when the exercise was over and I pulled my coin back, it felt so cold to me, so lifeless and cold. And of course, it's a metal, so it would be those things. But it felt like there was no opportunity there. Like it was just some dead and sad thing from a past age. And I actually gave the coin to the guy who was hosting the meditation. I gave it to him as like a tip for hosting a good thing. And he was this hippie was taken aback by, wow, you're giving me a heavy gold coin. And I was like, look, this is useless to me. I felt it in my palm, and this is cold and useless to me. It's not the future. So I handed him this 1 ouncer and left the retreat. And for years, that experience guided me. And what's funny is if I had been in gold the whole time, if I had socked my little money in gold, I'd be nowhere, I'd be nowhere today. But instead I socked my little money and my little amount of influence as a YouTuber. I put it all on the Bitcoin line and did much better than I would have if, again, I had caught the gold bug back then. So I'm grateful that for whatever reason, gold felt so fucking lifeless to me and so stupid. It felt like such a stupid thing to own. And now when I hold a piece of gold as as it's reviewed before it goes to my vault, when I hold a piece of gold in my hand, it feels like the opposite. It feels like a movement that's finally coming into being. And the vast majority of the gold I invest in is just ETFs. Like most other people, I just invest through a brokerage account. But when you hold a real piece of gold, like either a gold watch or Krugerrand or a small piece of gold bullion, small bar, when you hold these things, at least to me, there's a totally different vibe than how I felt in 2017. Absolute different vibe. Doesn't feel lifeless. Feels like it's ready to suck up the world's value. Feels the opposite of lifeless. Feels like in this post-pandemic kind of lost era, it might be the only thing that resets us properly. That's the feeling I get from gold now when I'm in the same room as it or when I touch some of it. It's a very welcoming vibe. I can't explain it. It's purely intuition. As a person who's honed my intuition to making money, the gold feels to me so friendly and welcoming. I can't really explain it in logical terms, but it feels like a different asset. And of course, the asset is always the same, right? There was some point in time, some of you are probably old enough that you actually experienced this. There was some point in time where an ounce of gold was $250 or $300 an ounce. So that one coin that today is worth $3,300, back whenever was worth $300. The exact same coin. Hasn't even been reminted. The exact same Krugerrand with the springbok on the back of it, that antelope-looking creature on the back of it. Same coin. It is the same bullion coin that was minted in South Africa decades ago. The only thing that's changed is the US dollar value. The only thing that's changed is our perception of how valuable it is. It's not the gold that's changing. It's not hiring people. It's not releasing new products. It's not coming out with a software update that everybody's excited about. No, it's still just gold. Just a rare yellow element on our planet. Rare yellow metal that is kind of the Sonic Hedgehog ring of our world. For all this talk about, mining from asteroids and how if we get to the center of the Earth, there's a lot of gold down there, supposedly, toward the core. The reality is we can't get to the center of the Earth. Even if you gave a billionaire many billions of dollars, they would be unable to do anything at cost. I mean, anything profitably, right? I mean, to extract an ounce of gold and to have that cost you $100 billion is obviously not a reasonable breakthrough. And so, point being, gold is still limited. These people who tell you, oh no, now it's worthless because you can mine it from the center of the Earth. Okay, go for it. Go ahead and mine your gold from the center of the Earth. Or, oh, you can just pull it in from the asteroid belt. Well, go for it. Go out to the asteroid belt and have a blast, And I think we'll get there. I think in 10 or 20 years, sure, AI-guided probes and stuff to the asteroid belt. It can push stuff back to low Earth orbit. And then a swarm of other drones can pick it apart and send the best stuff back to Earth. Just throw it into the ocean, basically. Right? Toss it into the Pacific Ocean. But we're not there yet. 10 or 20 years is the best case scenario, absolute best case scenario. So for the time being, we're stuck in a planetary economy. It's almost purely a planetary economy. These people who are, acting like we're already a solar economy are clowns. So gold is still rare. And again, it just appeals to me at the moment because, for one thing, the quantum computer breakthroughs are starting to rattle the cage of crypto a little bit. I still believe in Bitcoin and Ether, but I would not want to have every single shekel. I would not want to have every single shekel betting on these two blockchains. That's just me personally, not advice, and not a prediction that anything bad's going to happen. It's just I don't want to have all my eggs in one basket if the quantum computers are getting this much more advanced. So it just came out the other day that they've done the math on this, and if they were to have a 1 million qubit quantum computer, this is how they rate how powerful they are, is the number of connected qubits. If they were to get to 1 million qubits, it would only take such a machine 7 days to break RSA encryption, to break the RSA encryption that underpins Bitcoin's security. So 7 days is not forever. It's not thousands of years. When someone says it'll happen in 7 days, it's pretty much a guarantee that it'll happen, right? A week is not forever. But of course, we don't have these million qubit machines yet. That's not yet a thing. But it's conceivable that we will in the future, as they keep increasing the number of coherent qubits. So it's conceivable in the future we will get there. And when we do, basically all existing encryption schemes aren't going to work. And so for that reason, among others, I don't want all my eggs in the crypto basket. It's been a wonderful ride. It really has been. And I always believe in it to some extent. But how much money is in the world? Just think logically. How much money is out there? And of that money, how much of it has already considered purchasing some Bitcoin? And of that money that's considered purchasing Bitcoin over the years, I'd argue it already has. The money that wanted to be used to buy Bitcoin has gone to that. The money that's waiting for something, what is it waiting for? What catalyst is it waiting for to where that money feels safe enough to be in crypto? After the president talking it up to this extent, and the Bitcoin Reserve executive order, and BlackRock having an ETF structured around Bitcoin, as well as Fidelity and Franklin Templeton and Van Eck, and all these other ETF giants having Bitcoin products at this point. So what is that hypothetical person out there with money? What are they waiting for? What catalyst are they waiting for? What guardrail needs to be removed before their money can come in? When you have ETFs that can handle hundreds of millions of dollars or even billions of dollars of inflows per day, when you have that capacity, what's holding the big money back? And so I think, one answer is that we've actually reached something close to saturation. That this is something everybody knows about at this point. It's not brand new. And all the big money that's considered it has either kicked the tires and put some money in, or is choosing not to enter for some reason. But there's nothing we can do to convince that person at this point, short of them feeling some need to get it. I don't think structurally you can offer much more to a person to get them interested in Bitcoin. Now that we have ETFs, now that we have a pro-Bitcoin president, and that we have whole countries like El Salvador structuring their success around Bitcoin, structuring their future around cryptocurrency. So what more do you want? How much more money is out there to keep Michael Saylor's dreams alive, to keep his delusional dreams alive? And I don't know the answer. I don't know. There's certainly not unlimited money. So again, to support these prices, how much new money out there needs to be unlocked and needs to come into crypto? That's what we should be asking ourselves, is how much new money needs to come in just to sustain this, just to sustain where things are at. Whereas gold is always the same thing. So it's actually society repricing what gold is. Gold isn't changing. It's not adding new features. It's the same exact element sitting in a vault somewhere. So the only thing that's changed is now investors think it's more useful. And I think it's more useful because the more we abstract money by putting it on the blockchain, the more people, ironically, also want something real. The more we make money intangible, the more the market is going to want some kind of tangible fallback just in case. And you think about the people buying gold right now, people in China buying it at these gold stores I talked about, frantically buying up gold bars at these gold stores. And then people in India buying jewelry, not quite as frantic a scene as in China, but still buying it for similar reasons, buying it for the future. So, very big part of Indian culture, buying jewelry and showing it off. And then you got people in Europe and people throughout the West buying gold as, again, a kind of insurance hedge. You got rich people who use it to do things like line their swimming pools, like coat of gold. So that's very price inelastic, right? The person who decides they want to coat their swimming pool with 24 karat gold, and the satellite company that decides they want to spray their satellites with a layer of gold before launching them, or the solar panel company that wants gold for the solar panels, right? All these demand sources are fairly inelastic. The rich person lining their pool with gold, not only do they not really care about the daily price movement of gold, but if it were to double tomorrow or even triple, would they rip it out of their gold? Would they rip that gold out of their pool and melt it down and sell it on the market? Probably not. They don't care what the price is. Once they've put their pool together, and they have the gold lining, they're not going to sell it just because it doubles or triples. So that's supply that's basically sidelined forever. Same with the people buying jewelry, the people in India and the people in Europe buying gold jewelry. Is there some short exit plan? I'd argue in the vast majority of cases there isn't. These are people who want to hold on to it for years, if not for their entire lives. And so just like Bitcoin, you've got actually a crazy community of believers. They don't really communicate with each other aside from through the price. But you have this crazy community of believers in gold that spans different languages, different countries, different cultures. And I think the ETFs on Wall Street do a reasonably good job of representing that demand, of surfacing some real price discovery. And so, again, to these people who are buying it as a hedge against future events, and the people just buying it because they want to hold on to it forever, these are people who aren't going to dump out, I don't think, just because we hit, say, $3,500 an ounce. So we're at 3,300 and change right now. If we were to go up another $200 to $3,500 an ounce, is that rich guy in the Middle East, is he going to melt down his pool to earn a profit from the gold he just bought? Of course not. So again, I see a lot of the supply out there isn't going to move at any price. It was bought for a number of different reasons. And we could make this jump from gold being gold to gold being a kind of cultural unobtainium, kind of culturally super rare thing. You think about it, if it happened to Bitcoin and Ether, which are just lines of computer code, just private keys sitting on somebody's hard drive, string of text, and these things have gone to a multi-trillion-dollar valuation in total in just a handful of years. Well, gold is the ultimate rare money format that doesn't require a counterparty, right? For small amounts of gold, there's no counterparty because you're just sitting on it. Obviously, if it's a large amount, you have it sitting in a vault somewhere and a bank is insuring it, and there's a underwriter and all this stuff. So you have to believe that that bank will still be here, and you have to believe that the city where your gold's located in, like London or New York, you have to believe that city won't be underwater and won't be subject to nuclear attack. These are small risks, but real risks, because if your gold's gone, it's gone. And I think that the gold buyer, again, is immune to the price to an extent. If it were to be $4,000 an ounce tomorrow, someone crazy enough to line their pool with gold, they're still going to do it. Between $3,300 and $4,000, they don't care. they're still going to do what they want with the gold. Same with all these crazy architectural projects where, gold leaf everywhere. And in the jewelry world, they're still going to make Rolexes out of gold, regardless of what the price of gold is, because people demand it. So again, I see, much like Bitcoin, the beginnings of an economic community. And here we have the technology. The technology is just a rare element. It's sitting there. It's always been there. But now something's changing. People are trusting institutions less than ever. And to have all your faith in Bitcoin is, in a sense, to trust another institution. It's to trust the coders, it's to trust the people maintaining the Bitcoin code base. And it's to trust the big mining companies that are running Bitcoin software. Obviously, a lot of trust has been built up for good reason. But with gold, you get a totally different proposal, right? It's mere physics that's underpinning your store of value. It's the known rarity of gold and the fact we can't just make it out of thin air. That is what underpins it. And again, these proposals that dig to the center of the earth, or if you smash some subatomic particles together, you smash these things together and you can produce gold from lead. It's not cost effective. To spend $10 billion on smashing atoms in Switzerland to produce less than $1 of gold is obviously not something you can hang your hat on. But again, I see this crazy thing forming in the gold market where people are believing, like in the Matrix, right? They're starting to believe. It's like the gold is just gold. Whether you choose to treat it as a $300 thing or a $30,000 thing really comes down to how much faith do people have in these crumbling institutions. The banks sitting on $500 billion in unrealized losses. The currencies become less and less useful if the tariff war persists. One of the main use cases of the dollar is buying things overseas. If we're not buying things overseas, there's less demand for the dollar. The other big use case is taxes. If Trump is hell-bent on people paying less taxes domestically, that's less usage of the dollar. And now many states let you pay your state tax in crypto, in Bitcoin. So since many states allow that, that's further erosion of the dollar's monopoly over taxation. And it just becomes less and less useful over time. Just like Warren Buffett said about how, maybe people are going to be interested in other currencies. For him to say that 10 years ago would be completely mind-blowing and totally anathema to his vision. But now you see it's just inevitable. If the dollar loses enough purchasing power, people will turn to things like Bitcoin, and I think gold. I think gold is also going to appeal to many non-tech savvy people who still realize that something's occurring. And something is occurring. When you look at the price of Bit being over $100,000, you look at one measly gold coin being worth $3,300 and change, you can see that as purely the impact of inflation. Because these are goods where they aren't really influenced by anything other than the pure inputs of mining for them, right? Bitcoin is dependent on the mining cost, which is electricity and hardware. And gold is dependent on the mining cost, of digging into the ground and extracting gold. Neither of those things are free. They both require energy and outlay of capital. But yeah, I'm going to leave this one here. Sell in May and go away has been completed. And now we're just parked in gold, Bitcoin, and Ether. I might do a little bit of balancing here because I want to see what the best ratio is. I don't want to be overexposed to any of these things. But again, I think I've laid out my argument for why I think gold could be in for a hell of a rally over the next few months. But as usual, not financial advice, no guarantees. And this is the start of our summer hiatus. So it's not going to be a very strict hiatus. I'll do interviews from time to time, but just less show frequency than during the rest of the year. I'm going to travel a little bit, get some use out of the jet. And I don't want to feel responsible for constant updates. So not sure why somebody keeps trying to call. Constant updates and whatnot, just don't expect them except through the newsletter. I'll do some updates, link in description if you want to add your email address if you have not yet. and how quickly we've gone from January, when we got the YouTube channel back, to May, almost June. We're almost in the summer. So we've really ripped here. We've really gone through a lot of content, and things have really gone our way in a number of respects. But now summer is around the corner, and it's going to be a little bit quieter for a time. And again, the newsletter, if you need updates in the meantime. But that's it. And there's a lot to catch up on if you haven't been listening lately. Some great interviews have posted. Interview with my friend Ram, interview with Peyton before that, interesting actress here in Florida. Before that, interview with my friend Justin. So just some great content for you guys to catch up on. And the hiatus, again, it's not a real hard hiatus. I'll be checking in, but just don't expect as much content because we're going to be traveling. And I feel like we've won so many times here that, again, the gold is just the thought experiment. Maybe I'm wrong, but I've certainly I put some bets on the table, and I think I'm right. All right, you guys have a good one.